Hello, friends. This is Vivek Bajaj, your friend, co-founder, Stockage and Elon Markets. Friends, it's a very tough time right now. Markets are going down, and we all are living in a extreme level of uncertainty in our life. And every day we pray to God that Corona stays away from us. So yeah, it is a tough time. But then there is always opportunity in tough times. And it is our responsibility as a human being, different from other animals, to figure out if there is an opportunity in these tough times. The biggest question which people have in their mind right now is whether market is overvalued, undervalued, or is it a right time to invest in market? This is actually a billion-dollar question, and whoever gets the right answer to this question is actually can make $1 billion money from this answer. However, I'm not sure that I will be able to give you a clear answer to that question, but then I can try to do my bit of work in the small video, and maybe you can comprehend whether market was going to be at the bottom or is it could be a recovery from the in the market from these levels. Now, I have distributed this discussion in two parts. One is fundamentally and second is technically, right? And a lot of you who are there in the market, they will understand the difference between fundamentals and technicals. Now, fundamentally, when you try to value something or when you try to figure out whether the thing is overvalued or undervalued, especially when you talk about equity market, there is a very common concept used by everyone, which is called PE multiples. Now, what is PE multiples? PE, as the name suggests, it's market price divided by earning. So it's a concept which says that how much of current earning or future earning market is willing to pay for that particular asset, right? So current market price divided by earning. And when you talk about earning, as I've already used the term, it could be historical earning and also it could be the forward earning. Historical earning is the company or the market which has earned as on date, right? And forward earning is the market is expected to earn in future. So when I talk about market being undervalued or overvalued from a fundamental perspective, the PE, which is going to be historical PE as well as forward PE. Historical PE would be current market price of that underlying divided by historical EPS. And forward PE would be current market price of the underlying divided by forward PE. Now, let's take an example of Nifty. And I think all of us are interested in knowing what is the current PE of Nifty. Now, Nifty as a broad-based index, it has 50 stocks. So how do you calculate the earning of Nifty? Basically, you combine earnings of all those 50 stocks and you arrive at the EPS of Nifty. Okay, that's pretty simple. The way you calculate Nifty is the weighted average. Similarly, you calculate EPS of Nifty combining all the 50 stocks. Now, the EPS of Nifty could be available in multiple platforms. There would be various websites where you can see the EPS of Nifty. We use a platform where we do get the EPS of Nifty. So if you see the EPS of Nifty, that means what earning the companies inside the Nifty have made. As I said, there could be historical EPS or it could be forward EPS. So if I show you this graph actually says exactly how the EPS of Nifty has behaved. You see the yellow line in this graph? The yellow line is as on date what is the PE. And the left side of the yellow line is the historical PE. Historical PE means current market price or the price as, I'm sorry about it, the price as on that particular date. It is a quarterly graph. So the price as on that quarter divided by the EPS as on that quarter, the historical EPS. And the line on the right side is actually the forward P, which is current market price divided by the forward earning. How will you calculate the forward earning? So basically what all the big broking firms and the serious broking firms do, they calculate what could be the potential earning of Nifty henceforth in coming 1 year, 2 year, depending upon their estimate of the economy, depending upon their estimate of the performance of companies inside Nifty. So when you see the left side, this is the historical data since 2006. And if you see market uh, actually went down considerably in 2008, and we all know the crisis of 2008. At that time, the market earning and the market price made the EPS reach almost 10. So market actually, when there is a huge selling in the market, wherein there was exaggeration in terms of bearishness in the market, the Nifty EPS actually went down to as low as 10. But then market recovered very sharply towards the end of 2009, and the EPS from 10-12 level, it went up to as high as 22-24. Okay. Again, when market was progressing and the earning growth was not very visible, market was kind of still in a correction mode after 2009, 2010, 11, 12, 13 were not all that great years. Earning was continuously going down and the market price was also in a downward territory. Still, you see the P, which went up to as high as 24, it actually came down to almost 14, 15 level. After the new government came since 2014, market has been going up consistently because market is expecting that the earning growth will be there. That's why the price of the index is going up consistently. If you see, that clearly is getting reflected in the PE, which was there till last 2 months ago, and the PE actually went up to as high as 26, 27, right? Now, if you see the range of Nifty PE, 26, 27 is the higher range, and around 10, 12 or 14, this is actually the lower range of the market PE. Okay. So what is happening today as on date as we speak? Market today is also down, and earning obviously is at a certain level. So if you see the market earning, the EPS, the trailing EPS means the last 12-month or 4-quarter earning combined, the trailing EPS is around 480 to 490 levels, and the market price right now, as we know, there is around 8,500. So the P right now, the trailing P is around 17.5, 18. Okay. And the forward P, which is on the right side of the yellow line, which talks about what is the market participants or the analysts expecting the earning to be. So to our surprise, the market analysts are expecting earning of almost 560, 570 next year, which is FY21, and 600 plus in FY22, which is actually a massive expectation of earning growth in future, which will lead to a forward PE of around 12-10 as we see the forward earning estimates. Now, what does it mean? If you combine the whole explanation, what does it mean? It means that market definitely is getting cheaper because the higher P band of 25, 26 has now been reduced to around 18. But at the same time, whenever there is any major crisis, the P can actually fall down further. And here we have seen in 2008, the P actually went down to as low as 10. All right. So let's not talk about the forward P right now, because forward P is a concept which is always dependent on what is the forward earning expectation by the market. And as economic activity slows down, things like coronavirus and other things will definitely have a major impact on the future earning. So these forward earning estimates will definitely go down in days or months to come, and you will see that this expected forward P number, which is coming to around 12 and 10, this will also go up because prices, even though it will go down, the earning estimates will definitely go down significantly, much more than what the price will go down. So my point is that from a fundamental perspective, we are trading at around P of around 17 to 18, which is kind of a long-term average level. Market still has scope to go down as far as fundamental is concerned. But if suppose there is a lot of money which comes into the system again, like foreigners starts buying, or we get a lot of money which gets into pumped into the market once again, the P can obviously go up to 24, 25. But as far as current market scenario is concerned, where things are looking very negative, doesn't look like that market fundamentally is going to take support in near time. There is still a scope if this turns out to be a crisis, there is still a scope fundamentally market can go down further. Now this is fundamentally, and I've just used one concept P to explain you this. Now technically, which is more related to charts and understanding the psychology of the market and the trend of the market, I am a very strong believer of theory of weekly chart, because if you are looking at the long-term trends, you should always look at the weekly chart. So if you plot a weekly chart of Nifty in any charting software, I'm using a particular, you can use any of your charting software. If you plot a weekly chart and if you draw a trend line around that weekly chart, so there was actually a significant signal of market going down when it crossed below 11,300 level. Fine. But do we find any support at around these levels where the market is trading right now? So if you see, the whole rally of Nifty started in around December 16 when it made a low of around 7,800 level, and since then the market has been rallying with a higher lows and higher highs. Now that market has corrected, this 7,800 to 8,000 zone, this will become an extremely critical zone for the market. And I see if this zone is getting crossed, then we see a major correction further. But I believe 8,000 would give a decent comfort to the market, and I hope because fundamentally we are at an average range, and price will also correct further from 8,500 to 8,000, which will make the P further cheaper. I think this could be a level where we can figure out long-term investment opportunities for ourselves. For traders, obviously, you can't look at the weekly chart. You have to look at daily chart or hourly charts and figure out if there is any short-term change in the trend in the market. So friends, I hope this video is giving you some perspective about where the market is. And I hope you have learned something from me. In Elan Markets, our objective is always to make you think like the way we all are thinking. So I'm not trying to feed you numbers here. I'm trying to give you a holistic perspective, explaining you the concept. And I hope you will be able to track these data on your own and become a sensible investor or trader in the market. Thank you so much for watching this video. If you have not yet subscribed to our channel, please do subscribe to the channel and have full liberty of following us, tracking us, comment on our videos, and you ask questions and I will try to reply to your questions as well. Thank you.